All right, guys, so we're going to start off with our webinar. So the webinar is presented by Facia, and the topic of the webinar is optimizing compliance, choosing the biometric KYC service provider in 2024. So let's start off with the slides and a brief introduction about Facia. So Facia is leading face recognition vendor for security and identity management, as well as the world's fastest and the most accurate live voice detection solution. Facia enables businesses to onboard customers with a seamless process. Sorry. So it means like Facia is providing everyone, like most of our clients and everyone who wants Facia, to make their process flawless and to make it quick and more accurate. So Facia caters to more than 56 plus types of spoofing attempts with a 100% detection rate, including deepfakes, identity theft, and a lot of solutions. So some of the basic solutions of Facia are face recognition, liveness detection, age verification, face matching, photo ID matching, and face search. So moving along with, we have two speakers with us, Richard Graham and Christina. So a little brief introduction about them. So Richard Graham leads the evolution of Moody Analytics value proposition in financial crime and the third-party risk. He has specific and expertise in technology focused on frauds, money laundering, and sanctions. For the past 20 years, Mr. Graham has worked with some of the world's largest financial institutions, government agencies, and fintechs on the complex financial crime businesses and technology challenges, as well as moving over to Christina. She has been in business development for up to like 10 plus years, and she's more of like, she has proven experience in customer profiling, USPs, product development, and go-to-market strategies creation from scratch for the startups as well as the enterprises. So moving on with the presentation, Richard, would you like to give a brief introduction about yourself, if I've missed something about it?
Yeah, quite accurate. Yeah, I've been in the space about 20 years, focused, started out at Fidelity Investments, right, in the financial crimes unit, and then eventually did a lot of work with consulting on the vendor side. So happy to be here. Thanks for having me to the Facia team.
Pleasure all mine. Christina, would you like to introduce yourself a bit?
Yes, sure. Thank you so much. My name is Christina. I'm in charge of global sales and business development here at Facia AI. During the past 7 years, I've been helping different regulatory technology companies to boost their sales and revenues through different complex go-to-market strategies and innovative approaches. And my recent focus has been on risk assessment, fraud management, KYC, and AML transaction monitoring solutions as well. And I find particular satisfaction in working in intricate and technology-driven products, and I'm really happy to be a part of such an innovative AI-driven solution like Facia. Thank you.
Pleasure on us. And so last but not the least, I would like to introduce my co-host, Saad Basir, who's been with Facia from the start and helping throughout a lot of marketing strategies as well as in the business development role as well. So Saad, would you like to please give a brief introduction about yourself and start with the presentation?
Thank you, Subhan. So I've been the marketing and communications lead at Facia, and we've actually developed a state-of-the-art product that's provides several solutions to various industries, including fintech, KYC, banks. We help them onboard customers seamlessly with face recognition solutions, liveness detection. And as the world enters a new space of AI and deepfake threats, we are actively moving towards improving the security frameworks for some of the biggest organizations in the world. As we move forward, we've got, as we've already discussed, we've got two celebrated guests from different industries, which will be sharing a plethora of experience and their thoughts on how the know your customer industry is going to move forward in the coming year. Let's just start with basic introduction of biometric KYC. It has started to emerge as the trending solution to identify and verifying customers. So they, of course, play a huge role in protection against identity theft, financial fraud, money laundering practices. And as the world moves towards technology, as technology becomes more widespread, it is a dire need for organizations around the world to introduce solutions that can actively combat and challenge those. When we move forward, let's start with a basic know-how of how biometric data plays a role in the verification process of the organizations that are represented by our attendees. We're going to be running polls throughout the webinar, and we're going to be taking a lot of insight from how our attendees feel about it. So while the poll is in process, Richard, what do you think about the current landscape of KYC, and how is biometric KYC going to disrupt that space?
Yeah, so I think KYC is viewed largely as a cost, right, at a lot of financial institutions, right? It's something you have to do, right? You have to understand the accounts, you have to understand the nature and purpose and sort of the documentation right behind the individuals. But at the end of the day, it is quite expensive for a lot of banks and fintechs to do it because it's so manual. So I think the first horizon is how much automation is going to happen. Right? So you've got a lot of like kind of older technology in different banks. So the first step is how do you modernize that technology, right? Bring in more data sources, do more accurate screening. So you're not, sifting through false positive matches on your sanction screening, for example, when you're doing onboarding. How do you bring in, better quality data sources like the sources Booty provides? It's also how do you look for ownership information, right? So customers that are corporate customers are going to give you a lot of different corporate documentation about their company, but owners can change and negative news can happen on those companies. So that next horizon is how do you bring in these insights into an environment to both reduce that cost and make yourself more valuable to the business, right? So that's what I kind of see near term. I also see that continuous monitoring piece. A lot of companies are striving to get into continuous monitoring. So when that ownership changes or when that negative news story hits, what can they do about that without waiting a year for a calendar-based view or 5 years for some of the low-risk customers? As information happens, you want to address it in real time. So that's what I typically see, and I'm quite intrigued by your views on biometrics as sort of how that would augment and enhance the existing use cases that we see.
I think we'll let Christina shed more light on it, how biometrics enhance it, and considering how she handles a lot of business side of things, the cost involved certainly play a very big role in why companies choose for KYC practices, or let's say e-KYC biometric practices. So I'll have Christina add more to it.
Yes, for sure. Well, from my perspective, like I've been working for different KYC providers over the 7 years for now, and there was a very high interest in biometrics starting from 2020. It's been a year of global pandemic, crumbling economy, etc. And a lot of traditional banking institutions, they switched to more modern customer onboarding methods, remote onboarding, right? And since then, they're like putting a lot of funds in order to automate those processes. And I would say that it's been like almost like 4 years for now, and a lot of institutions are still doing things manually. And I could agree with Richard here that there is a lot of improvements that need to be done for preventing different types of identity fraud, because it's a huge thing here. And even back then, if we're talking about like 2020, like identity type of fraud was happening every like 59 seconds, like every minute, like something happens, like hijack accounts, takeovers, and cyber criminals were like taking over individual or business accounts as well. And the same things are happening right now, even like it's scaling. And like currently the biggest issue right now is not only about just the account takeovers, but the like with the rise of generative AI, a lot of things are happening, and you can just like generate a passport, you can generate the identity and create a fake account as well. So it's a huge thing here, and like currently a lot of businesses are also investing in tools like Facia or similar biometrics 3D liveness verification software, where we can understand that that's the real person, because a lot of like 3D masks or video injections are happening, or deep fakes, and like you certainly need to be ready to, you know, combat this type of new fraud that is happening.
So I
Certainly.
think just on that, that's interesting, because when I talk KYC, a lot of times banks think about KYC as the regulatory control, right? How do you do the due diligence and the obligations, right, that the regulators ask you to do? But increasingly, those teams, right, are starting to also look at fraud, right? Why spend all the time and effort onboarding someone that's an obvious fraudster? So, I think that's a good point of view.
Yeah, definitely.
Yeah, I think moving forward, they're not just thinking about regulatory compliance. It's also a form of how they can do damage control in terms of the amount of attacks that are happening. So interesting that we talked about the banking sector, since we have the types of KYC here for our attendees. We move from the traditional knowledge-based or credit bureaus databases, and we're moving towards the world of biometrics slowly. But let's look at this. By 2024, the banking sector is going to perform 37 million checks, which is by far the biggest sector that is interested in this. So do you guys feel that regulatory compliance does play the most significant part, or there are banks that are actually are maybe proactively trying to guard their customers and their operations with advanced features such as biometric KYC?
Yeah, I mean, in my view, right, the number one driver for doing the KYC, CDD kind of processes in the US is you have to, right? You're regulated, you have to do it. And if you don't, or you don't do it well, you don't do it to a standard, then you get fined, right? So you can always look at the OCC website and see who's been fined for what. And a lot of times they're doing it, maybe they just don't have the right level of risk scoring, or they don't, look at everybody enough, right? They don't collect the right data. So those fines drive reputational damage. So that is sort of the best practice, is to get it right. But increasingly, there is a fraud use case for those traditional kind of KYC teams. And I think on top of that, you think of the trends that Christina mentioned. One of the big trends, right? If you look at Southeast Asia, everyone gets those texts on their phone. I talk a lot about this at conferences, but you get those texts on your phone, right? Like, hi, is this Jennifer, right? I have a meeting with you later today. And it's like, those are all the startup scams that I call financial grooming scams, right? Where they're trying to build a friendship, build a relationship over a very long period of time and get your money, right? That's what they want. So they'll convince you to lie to your bank, right? Make sure, don't tell your bank you're going to send money to crypto, to some, bogus crypto kind of address or application that's not even real. They actually want you to, to tell your bank it's for a real estate investment or something else, because the banks have caught on. So even knowing your customer, right, when your customer is being manipulated, you might not truly know them, because they are, being coached and groomed on how to send their money to fraudsters that they think is an investment through a love interest, right, that they met randomly online.
I think that's also why awareness practices have to be increased as well. I mean, it's not just it's not about their customers not being authentic enough. It's also about them being tricked to a certain level, as you've talked about the biggest scams that are going on in the world right now. And that sort of brings me to the second point. Christina, so on a customer level, when you're talking about a bank or you want to engage, let's say create a new account, do you think that customers are now actually thinking about the technology that's in place, or let's say the security frameworks that are in place when they're opening up a new account or something?
Yeah, well, basically, when we're talking about the whole process of customer onboarding, a lot of like financial institutions, they are trying to do both things, protect their reputation and protect their customer accounts as well, because we're not talking only about the new accounts opening, but to protect the existing accounts as well. And there is also another trend that is going on, is not only card present transaction, but face present transactions as well, because like it's such an easy thing right now to hijack someone's account, to lead the guides, you provide them like with some sort of like guidance on how they should log in into the account, to pass some information from one bank account to another. So there are a lot of different scams going on, but at the same time, if you're if you have a nice like polished risk assessment and like risk policies, you can track some sort of like suspicious activities in customer behavior, and then you can also implement some sort of like face present transaction. So every time you see something like very suspicious happening, for example, your like average amount like of I don't know transactions, or like cross-border payments or cross-border transactions was like, I don't know, $100 a month, but all of a sudden you want to like transfer I don't know, $5,000, it looks suspicious, and you need to make sure that, well, you want to protect your customer first of all, and it's the one of the most, I would say, critical issues right now, because a lot of guys are still using OTP as like protection for this kind of like cross-border payments, set in one-time verification code, but you can also spoof that, but you cannot spoof face. Yeah, you still have this kind of like generative AI going on, but it's not sophisticated at the level where you can do that very easily. So by implementing some sort of like AI-based facial recognition technology, you can definitely protect your existing customers' accounts as well. And it's very important. And a lot of institutions are trying to implement such technologies right now, but still, again, it's very hard to align all the different data points that they're taking during the customer journey or customer behavior, like login information, account information, different behavioral patterns, transaction data, and a lot of things like that. They're usually not being like tagged or labeled properly, and it's very hard for different institutions. If it's a small institution, you do a lot of things manually, or you have some basic risk assessment models, but still there are a lot of improvements. And like I've been attending different webinars and conferences recently, and a lot of financial institutions, they say that, well, we're still struggling with correct data management and labeling, and that's also a big issue. And probably it will be a new trend for the next couple of years. So, and from the regulatory perspective, you also need to stay compliant while you're doing all this fancy stuff with your risk assessment models.
Yeah, I think that's a key differentiator, because since you've shared how these new kind of generated deepfakes that are also tricking people's or impersonating someone's face as well, but as we go along, these are going to only get better. So let's do a little comparison. Richard, let's talk about the traditional and biometric, or let's say advanced KYC methods that are currently in progress. What sort of insight do you have in terms of companies that are more adaptable, or let's say more acceptable to it? We've got three measures here: identification, verification time, and security. So do you think that these are eventually going to play a bigger role in determining which method they would go for?
I think, with identification, right, it's the minimum standard is you have to collect documents, right? So, in the US anyway, as long as the regulators say you need these documents, that's part of the process, right? I think the verification time, especially when you're talking about businesses, right? If you're not talking just about people, but businesses too, that adds time, right, to verify the document. You have to use multiple sources. And for example, we have corporate firmographic data, right, where if you say you're from this company and you're a director, you can check against the directors in that corporate record that we have, or we can pull live registry data down, right, if they say they're incorporated in this location, you can pull down that corporate register directly from the state or country register. So I think, those things are always, in my view, always going to be part of the process. But I think, as deep fakes and some of the things you've raised, right, like get more challenging, there's and fraud kind of Gen AI, right, to create fake documents. I mean, some of the fake documents that exist today are ridiculous. They don't look good at all, right? They're clearly from people just taking like the CEO of a different company and then just printing it on a form and claiming they're that, and they're using that in scams, maybe not to their bank, but certainly to people that they're sending these messages to, right, to try to convince them that they're legitimate. So I do think that you'll see those kind of as part of these processes is here to stay. And then on the security side, vulnerable to document theft or forgery, I mean, that is, a common thing, right, where people will submit fraudulent documents. So yeah, I do see those as kind of being a core component still, but I would be very curious about, your biometric piece, sort of how you view that.
Yeah. I think it makes sense. And Christina, so to share more on it, these are, I think, measures that you would have generally more expertise on. So do you think that it is going to be a stark difference in terms of when you compare user experience, cost, and compliance with traditional and biometric KYC methods? Do you think that there's a difference enough that people are moving towards more acceptability of these methods?
Yeah, well, I see positive trends, but still, when we're talking about traditional banking, we are taking into account two different types of users. Some of them are still like walk-ins, so some like guys that are walking into the institution, opening the account, they want to do the customer due diligence against this new client, right? And still they're usually just like asking for the document. If it's the B2C customer, they're just asking for a passport, ID card, travel license, and they make a photo in real time while the client is in the bank. While they're also having another chunk of customers that are coming to them online. And of course, you need to make sure that you're like staying in compliant with all the regulations and provide your client with the most seamless user experience, because when you're a walk-in customer, you have someone to guide you. And usually like walk-ins are like people in, I know, like 40, 50, 60 age old, right? And they don't have like a capability of like, online account opening. They are not familiar with those things, right? And for sure, you still need to like keep this kind of traditional banking on, but for younger people, there are like a lot of neobanks, digital wallets with the online account opening, and it's huge, and a lot of new businesses are opening like every month, like a lot of customers on a monthly basis. It's like about 40 to 50 customers with the new digital, like digital loans, digital mortgages, digital credit cards, virtual cards, and so on. A lot of products like that are like opening and increasing all over the globe. So for the online account opening, for sure, you need to implement a sophisticated 3D liveness verification. Still, there are a lot of like already established online bankings, but they usually use 2D liveness detection, some sort of like passive liveness recognition, which you can easily spoof. Because in a nutshell, you're just providing a previously taken selfie or a picture of yourself with or without the identity document. And you can easily manipulate. Yeah, you can forge this like just with some, I don't know, Photoshop or anything like that, right? But with the 3D liveness detection, where we're taking into account the real-time camera feed, it's way harder for the fraudster to make a deep fake or to manipulate with different environmental things, or to do some sort of eye substitution to overcome the the models, like fraud prevention models. But still, yeah, it's a huge thing, and I think during the like probably within 2 to 4 years from now, it will be one of the like major things for the account opening, for the fraud prevention, and for making sure that you're protecting the customer while you're giving a seamless experience during the onboarding itself.
Yeah, I think you raised a valid point in terms of individuals still walking into banks and wanting to open their bank account. So there's still a large segment of the market that's going to be using the traditional methods, and it's only about time when people get more aware of the situation and they move towards these methods that you've just outlined, 2D and 3D live transaction. And I think that's somehow also one of the challenges, just like you've outlined how a certain age group could find it challenging. Then we do have other privacy and data protection concerns, because we hear it so much around us that whether the emergence of artificial intelligence and technology, whether it's creating great new avenues and opportunities, it has its privacy and data protection concerns as well. And then standardizing such methods is always going to be a challenge. Apart from these two challenges, which I think our users can also view, Richard, do you think of any other challenges that KYC providers could face or financial institutions could face in terms of for onboarding their clients?
Yeah, the big one right now is the Corporate Transparency Act's new FinCEN Boys or BOSS database, however they're calling it, right? So that's where FinCEN is going to collect every company record in the US, minus like 22 criteria, right? Like publicly traded companies, but they're trying to figure out who are the companies in the US and who are their owners. So when that database is live at the end of 2025, it is technically being built out right now as different companies are learning about it and populating it, but there's a big question about what that's going to look like when it's done. Anywhere from 28 to 35 million records will be in that FinCEN database, and the banks will now have access to this database, but it sounds like one at a time record searches. And you have to have them as a customer. So that's a big kind of piece, but also on top of that, if you're creating the companies, if you're the one creating the company, going to the FinCEN website and uploading the form, you have to provide your own ID, right? So like even if I'm not the owner, I might be an admin or something, right? I have to put my license, right, or my passport or something in there. And so FinCEN is going to have this big database. They won't have any biometric data, but the banks will need to be aware that there's this record. This is what they told the government. Cross-check that against the accounts potentially that you've opened. Are they the same? Is it outdated? What's the process to reconcile? So all those pieces are, I think, defined, but in practice, they're not being used quite yet because they're just starting to roll out access to the database to law enforcement. But eventually, banks will be able to access that system as well. And there's a lot of uncertainty on how will they do it? What will that mean for the work they're already doing today, and things like that.
Yeah, I would agree here. We're dealing with not only financial institutions, but with a lot of companies from the corporate sector, legal firms, accounting, bookkeeping firms. They also need to be and to stay compliant with this new regulation going on. And I would say that a lot of them are not prepared at all. So, and they are just having their huge databases with 70,000 different records, with personal data, with UBO data, corporate data, completely unstructured, completely outdated. And like there are no particular like rules or like methodologies on how you would need to update those databases in order to stay compliant. So as a general rule, any financial institution or an institution from the corporate sector needs to follow. They need to have clean BI data to uncover relationships based on different like surveillance methods. You can tie related individual to corporate customer. You can identify if the same credit card customer is related to a legal entity as a beneficial owner and vice versa. So definitely like a lot of companies are not prepared for that. Hopefully this will change during this year, and we'll see how it goes.
Yeah, I think data in every form and shape is always a challenge because of the amount of just the sheer amount of volume of it, and then bringing it along to insights and everything. I think Richard explained that very well as well. There are acts coming in this space, but it will take its time in due course. When we talk about the trends in 2024, biometric verification seems to be the one of the leading ones. Richard, let's talk about the integration of behavior analytics. How do you think that is going to play a part?
So the integration of behavioral analytics, like, for example, you're talking about like in fraud or money laundering, you're talking more about behavioral, like is it sort of a fraud use case you want to talk about, or you want to go into AML, I guess?
Yeah, I think it's primarily the fraud use case we're talking about.
Sure.
To identify those patterns, and then, for example, if there's a history of a certain, let's say, geographical location, when a customer signs up from a certain location, and then you see that there's a certain percentage of fraud that gets up when there are users from that demographic. Those sort of analytics, I'm pretty sure onwards 2020 they are being used a lot. But when they integrate with biometrics, maybe that's one of the game changers in the industry. What do you think?
Yeah, so behavioral analytics are, I think, more on the, if you look at fraud vendors, right, fraud detection technology, right, like there's going to be some banks that still use rules-based, right, but in fraud specifically, in AML almost exclusively. But on the fraud side, understanding behavior, right, so that you can understand what's abnormal is really helpful for fraud detection, right? Because you have to remember, anytime you alert something in fraud, you're holding up a payment, you're holding up a transaction. It takes an analyst then to work that transaction, or maybe the end customer works it via an alert on their phone. But there is a cost every time you alert, but you want to get it right. So behavioral analytics is definitely the gold standard to fraud right now, right? Or fraud detection. But I think the key piece with biometrics and a strong KYC process is, if you can stop people who are going to misuse the accounts anyway from getting in, right? Either they're using synthetic IDs, or they're, just creating accounts to defraud the bank. Stopping them at the door is a really powerful thing. So then you can focus your fraud program more on actual detection, right, of people's accounts that may be been compromised, or accounts that have fallen for scams, and things like that. So I do think there is a powerful kind of component up front to stop that behavior before customers start to actually do the transactions.
Yeah, I think we understand that these trends are mostly going to go along in cohesion to create a more robust system globally. Even if you're talking about blockchain for secure identity verification, a lot of and let's say non-regulated platforms want to do that. We saw that massively in the crypto space. But can it be also become a part of your traditional, or let's say digital banking even? That is going to be a big question for the coming year as well. So if we move on to evaluating the effectiveness of KYC providers, how do you think that all of these things come into the mind of, let's say, our compliance officer or someone who's mitigating the risk at an organization? Do you think that there's a priority list where one takes precedence over the other, or these are all equally important? What do you think, Christina?
It's equally important, just because if we're talking specifically about the financial institutions, the end user can interact with the institution through different ways. It could be application, website, call, walk-in, like any other way, right? And we definitely, and the banks, they need to add additional layers to enhance their process on every single way where they interact with the customer, with the existing customer, or they are onboarding a new one. And they definitely need to enhance the capability of monitoring different fraud activities. So compliance and regulations, super important, and accountability and scalability is very important. But you need to like meet both regulatory requirements and user expectations somewhere in the middle. Like you need to provide your end user a great tool in order to like quickly and efficiently onboard him or provide service to him once the user is already your customer, right? And at the same time, you need to understand their regulatory expectation, understand your institutional risk appetite, understand your products and services lines, understand customer transactional behavior and data. You need to still meet the law enforcement regulations and build the right scenario in order to, provide your end user with and your customers with the best possible solution while you're mitigating risk, while you're saving your reputation or keeping your reputation at a high level, right? So it's a huge thing, and you need to balance all these things, I guess. So it's equally important for sure.
I think when you talk about accuracy and reliability, you're absolutely right. That has to take precedence alongside compliance and regulations. But the other things, I believe, they could change from industry to industry as well. Especially if you're talking about integration capabilities, support, and maintenance. That's one of the things that could differ when selecting KYC providers. And that also makes sense because there's so many types of integrations, there's so many types of requirements. We also talked about threshold levels of how much do you want to actually, let's say, expect from the customer to do or to make that effort while they are submitting their documents or their images during the KYC process, and how much relaxed do you want to have them. Let's say if there's a dating platform, maybe the relaxations are more when they're creating a new account, but when it's something else, let's say a bank account, then it completely changes that experience as well. We've got a very interesting question as well from one of the attendees. And I think when we talk about how to prepare your organization for the future, investing in resources, again, that is a big part. But the second one, training and education, I think on a mass scale, the awareness needs to increase around the acceptance of biometrics as well. The particular reason I'm saying is because the second and third is kind of interlinked. A lot of people feel that they should not submit their face biometric data just because there could be data breaches. But we need to maybe enhance their awareness that if they are submitting it to the right organization, it is actually beneficial for them because it will keep them safe. How do you think, Richard, we can play around this game and increase level of awareness where people are more acceptable to using biometrics and submitting their biometrics? Because I've seen there's been some campaigns in recent years regarding the submission of biometrics. Not everybody wants to put their face in front of a camera or upload it on an application.
Yeah, I mean it's a good question, right? I prefer to, personally to do that kind of account setup at a bank. That's my personal preference. I have scanned my face, right? I'm on a camera right now, not a big deal. But when it comes to uploading my identity, right, my license or my passport into a website, I'm less likely to want to do that. There's certainly exceptions, right? I book flights, I book travel all the time, so I put my passport into that. So I'm somewhat used to it for airlines. I'm not used to it for fintechs. I'm definitely okay with it for a bank, but it's got to be a bank I have a good relationship with. I know, I trust. So I don't know if I'm the right person because I'd be a hard one for me to do.
Yeah, reputation of the company does inevitably play a role in that, which is why you said not fintech. And what are your thoughts on it, Christina? How do we help people, become aware that eventually biometrics will be a game changer in terms of protecting their own security and not just to benefit the bank?
Yeah, I would agree here with Richard regarding the trust level for each specific institution or company, right? Because you don't know exactly how they're like managing your personal data, because there are a lot of breaches going on, right? And you want to stay protected because it's your unique identifiable information, passport, your biometrics, fingerprints, etc., right? And still there are a lot of regulations and nobody seems to care about that, because like every single year we're seeing the cases where, well, financial institutions are experiencing data breaches, right? And they're losing their trust, their reputation, and so on. A lot of customers just don't want to, like Richard, they don't want to like use online application for opening an account, etc. But it's better just to stay safe, play safe, go to the branch and do all the things on spot, right? So building trust is definitely a huge thing here. And still, there is another trend going on with the Web3, where everything is like blockchain based, decentralized, and they have more sophisticated ways on how you they will protect your private data, including your biometrics. So basically, probably the best way is just to have some sort of cross-institutional relationship-based surveillance system or a customer database where you just like have one account, super protected account, where you store all your crucial personal data, your passports, your biometrics, etc. So if you want to like open an account in any other financial institution, you don't need to submit like it once again, like, and like every time you need to like apply for a loan or whatever. So probably will be a new trend here, but still it's something that is just on a very, very early stage here right now.
Definitely. I think that brings us close to the discussion. We have a very interesting question from one of the attendees. Saban, would you like to ask
Sure. Thank you,
from
Saad.
one of the experts? And
So
they can
the
go.
question, one of the attendees asked the question is like, why is there a gap between what governments want to regulate and the preparedness of the companies to meet those regulations? I think he's want to like calculate the difference between it, like what is the difference between and what the governments and the companies are doing about it, like what's the gap, what is the loophole between it, and how can company may resist such regulations, but they are ultimately compelled to comply? How can the situation be improved, and why does it disconnect exist? So I hope you guys get the question. So Richard, would you like, as you have a lot of experience in AML as well, so would you like to give a brief answer about it?
Sure. You know, a lot of times regulations are reactive, right? They react to a world event. The reason we've seen such a large increase in money laundering detection kind of software has to do with the Patriot Act, right? And sort of the additional companies and kind of regulations that need to happen to make sure we were responding properly to terror financing and terrorists using the banking system against us. So those regulations come out, and that came up quite quickly at the time, to really better prepare the banking system for, finding these different things that can exist in a bank, right? That needs to be detected. But the other thing we see is things like agencies like FATF, right, which does a lot of global standards for money laundering. FATF will come up with different things to compare countries to say, here's who's doing some things right, here's who's doing things wrong. I'm pretty sure Corporate Transparency Act that the U.S. Has recently put into place came from a FATF report from like 15 years prior, right? It just took a long time to kind of capture that beneficial ownership data at the government kind of level. So there is oftentimes it's both reactive and it can take some time. And banks spend considerable amounts of money on financial crime detection and money laundering detection, and ultimately they're going to do, I think, what's in the best interest of the regulation, right? They want to make sure they're compliant, but it's sometimes you build your processes around the regulations today, and then something might change that's drastically quite different than what you're used to. We saw that with the Corporate Transparency Act, where the bank is already collecting the customer data, the IDs, they're collecting all that data, but the government's now doing the same. And they're saying, well, you can use this, right, in a certain way, only a certain way, And the banks are kind of like, we already have all this data, right? So we don't, if we use that, then it adds more steps and more processes. So I don't know what the real answer is, but ultimately a lot of these regulations are quite reactive, and it can take some time to meet them.
Yeah, perfect. Thank you so much for the insight. And as well as the discussion continues, like Christina, what would you like to say about according to the business development perspective? Like whenever you talk to the clients or or to the potential customers, do they feel the same issues regarding this? Like what they have to say about these, like or what are their questions and how do you tackle that?
Yeah, well, I can agree that there is a huge like gap between the regulatory requirements and the actual way how different companies are meeting those regulations. Still, there are like no certain like strict rules, and there is no regulatory pressure at all, and regulators don't seem to care about the outcomes of different policies that different companies are trying to implement, but still they just want you to stay compliant and to be able to prove that you're compliant, right? So basically every single customer, they need to have clean label data to provide clean and actionable intelligence report to a regulatory body when it's needed, right? So that's the only thing, and there is no like golden rule on how you do certain things in order to meet the regulatory requirements, but like everybody is trying to find their own way and find their own practices. So yeah.
Perfect. I totally agree with that. Thank you so much for that. And further on, that was the only question we got from the attendees. I think the rest was good to go. So last but not the least, I would like to thank you guys for attending the webinar and being, the speakers, the panelists, and giving your special time to us, to the community around the people, to all the people around the world who are, attending the webinar. And it's been a great session, and it's been great hosting you guys, especially Richard and Christina. Saad was actually the co-host, so Saad, thank you as well. And Saad, would you like to, say something at the end about the webinar or to?
Thank you, everyone. And I think that there was a lot of invaluable insight for everyone, considering the integration of analytics and thinking about from a consumer's perspective as well. Those were the key takeaways that how customers think about submitting their data. And Richard shared a bunch of new regulations that are coming in place, the People's Act, the Corporate Act, in 2025. I think that will be something that we all believe will change how companies react to it. And lastly, we discussed about the disconnect, that it does exist, but I think both organizations and governments are looking towards maybe filling that gap and going more in hand to create generally a safer digital world for everyone.
And
If any of our guests have any final thoughts, please feel free to share.
Sure. Thank you everyone for joining today's webinar. It was a pleasure talking to you as well, Richard.
Thank you for having me. Appreciate the time, everyone.
Thank you
Thank
so
you.
much. Thank you so much
Cheers,
to
everyone.
everyone for attending the webinar and for giving the special insights. So I hope to see you guys in the next webinar as well. Okay, so bye-bye. See you soon.
Thank you. Cheers.
Cheers.
Bye.